So I'm very excited today. I am joined by the CEO of Ether Capital, Brian Mosoff. Thanks so much for joining me, Brian, today to answer a lot of questions about crypto and Ether and everything to do with crypto. You're the first, real crypto expert I have on the channel. So I really appreciate it. Welcome aboard.
Thanks for having me here, and always happy to chat anything crypto related, bull market, bear market. This is my world. So thanks for having me.
Glad to hear it. So you are CEO of Ether Capital. So can you please explain what your company does, how it was created, why it was created in the first place? Tell me all about your company.
So I've been around the space for about a decade now. So I've kind of experienced it all. I've seen the highs, I've seen the lows. And in late 2017, Somsafe, who is the head of Purpose Investments, very well known in traditional finance and building structured products, was watching a bull run in 2017 around crypto. Bitcoin's, on its way up to 20,000, Ether's on its way up north of $1,000. And this is to the backdrop of the ICO mania, people issuing tokens, new coins. And Som looked around and thought, certainly there's something happening here. Wasn't quite sure what was going on or how it was going to play out. But how do you bring an access point to the capital markets and put together a group of people with a very focused thesis to say, we're going to declutter all this noise for you. We're going to focus on where is that signal amongst the noise. And that basically is the birth of Ether Capital. In early 2018, the company went out and did a capital raise. It goes live in April, starts trading. And so the first thing that Ether Capital was an access point to get exposure to the price of Ether. This native asset to the protocol that we believe is very important, that has a tremendous amount of upside, and we believe is going to be this once in a generation like asset to own. And it's going to be the backbone of the next generation of finance and whatever Web3 is going to shape up. Ethereum is going to be very important to that narrative. And so Ether Capital, that was phase one of the business. And now we are in transition to becoming more of an operating business. We are the first public company, I think, in the world to stake a significant amount of Ether. And we are then going to use that yield to build out operating businesses focused on key infrastructure. So we're tied to anything that's happening in the Ethereum ecosystem. That's really what this company is about. And we also helped Purpose put together the first Bitcoin and Ethereum ETFs in the world. And our role in that was to act as the crypto natives who understand all the nuance and complexities around custody and execution to make sure that it's a best-in-class product to bring to a different set of investors who wanted crypto exposure but didn't want to sign up on a crypto exchange and deal with private keys and custody. Right. They just wanted to buy an ETF to track the price of these assets. So that was our role in those ETFs.
Yeah, very convenient, right? You get it in the form of an ETF. So thanks for that. Appreciate it. Now, the name of your company is literally Ether Capital. So obviously, your company focuses on Ether, rather than other cryptos out there. So why did you guys decide to focus on Ether specifically?
So this is helpful, actually, I think, for a lot of people in that there's certainly a ton of cryptocurrencies out there. There's a number of smart contract platforms. There's ones that call themselves ETH killers. And as someone who's been around the space for a long time, I watched in the early 2012 era, there were people who were taking the recipe to Bitcoin, right? This is open source code. Anyone is able to go on GitHub, which is a repository for code, and copy the Bitcoin code and tweak around the recipe and say, we want a higher supply. We want block times to happen a little bit faster. And that gave birth to Litecoin and Dogecoin, things that people probably have heard of. Those are just copy and pastes of Bitcoin with some tweaks, but they weren't. Okay. Peter Thiel has a book called 0 to 1, and he talks about inventing new categories. You want to be a product leader, you need to invent a new category. Bitcoin certainly invents a new category with its birth in 2009. And it wasn't until Ethereum comes along and proposes that the base layer of these blockchains could be more flexible, that if you inserted richer code that would allow developers to do more interesting things, that was the birth of a new idea. And it rallied a group of developers around it, different than Litecoin and Dogecoin that you could argue they're good, they're bad, who cares, junk, meme, whatever. Nothing other than Bitcoin was really gaining meaningful momentum from a developer standpoint. And Ethereum comes along and it is another 0 to 1. It invents a new category. It invents a smart contract platform. And so when we're looking around now at all of the other activity that's taking place, Solana, Polkadot, Avalanche, it's not that we don't believe some of them may have some success, but the real meat of the developer community, the real capital and mind share has stuck to Ethereum because it was that 0 to 1. That is where the most infrastructure is. That's what we think is going to be the most institution grade in terms of product offerings. And so for now, Ether Capital is focused on what we believe is the premier ecosystem. It's the number 2 by market cap. behind Bitcoin. It's the number one in terms of smart contract platforms, but it certainly has the most infrastructure around it. And for those who are curious how to quantify some of this stuff, there's a great resource called cryptofees.info. And you can see the daily transaction fees people are paying to use any of these networks. And so when you look at a website like that and you see that Ethereum has $10 million in the last 24 hours paid to the protocol, and some of the smart contract platform competitors may have had, $30,000, that's telling you something. That's telling you where the users are. And when people say, but Ethereum is expensive, or it's not as fast as something else, like, well, there's more to this than just cheap and fast. There's, again, that infrastructure and all that stuff. So for now, we are very focused on Ethereum, and we're very bullish on its future and the developments that are coming down the pipe.
Yeah, very exciting stuff. I mean, Ethereum, there's a lot of things going for it. You hear a lot of stuff, and I have a bunch of questions for you on that. Smart contracts, that it's going to be part of the big web 3.0, the internet 3.0. So I'll touch a little bit on that in a second. One question I want to ask you, because my channel, focuses on mostly for retail investors, and I myself included would be in that category. I'm not a crypto expert. So Bitcoin, I kind of understand, it's really designed for a store of value. You hear things like the digital gold, or it's really a store of value. But Ethereum is different. It's more like a platform. So I'm sure you get this question a billion times. In 2 minutes or less, can you explain the difference between Bitcoin and Ethereum as simply as possible, as simple as possible?
Bitcoin comes about as an idea in late 2008 through a white paper. And Satoshi Nakamoto, whoever wrote that white paper, was trying to build a currency for the internet where there was no central authority. And they looked around at the real world and said, well, what is the best monetary policy? And they looked at gold and said, well, here's something that has a finite supply. It needs to be extracted at this relatively predictable rate through mining, through the Earth's crust. And you would end up with this kind of decentralized digital commodity. The problem with gold is that it's physical and not digital. And can you create a digital version of gold, essentially? But that will act as money for the internet. And that's at the heart of Bitcoin, what this is. It's replicating the mechanics behind gold, but in this digitally native way. Now, the downside of Bitcoin is that that base layer doesn't have a very functional programming language baked into it. So it's good for me sending to you 1 Bitcoin or 0.1 BTC, and you can send it back to me. So you've got an add button and a subtract button. But if I wanted to ask the blockchain to send that Bitcoin to you 5 days from now, you can't actually program the blockchain itself to perform that activity. The code isn't flexible enough. And so what Ethereum does is comes along years later and says, this idea of a blockchain, this decentralized consensus is great, but what if we build iOS instead? What if you have the App Store where everyone can have different applications, and you have this consensus mechanism at the bottom that's recording all of this activity? And some of the activity could be lending, some of it could be trading, some of it could be just simply moving ETH between accounts, some of it's going to be NFTs in the metaverse. The point is, Ethereum is this global settlement layer for all sorts of really interesting activity, and you can't do that on Bitcoin. It doesn't mean that Bitcoin is bad or that Bitcoin doesn't have a good value proposition. It's just that they're doing different things.
Okay, that's great. Yeah, so definitely much more functionality, I think, with Ethereum, whereas Bitcoin is really a store of value, like a digital gold, and that's really its purpose. But Ethereum is kind of like the next version, or it takes that basic blockchain technology. Correct me if I'm wrong here, I'm not a crypto expert, but it capitalizes, it uses the good stuff about it, but it expands it into other functionalities.
Yeah, so Bitcoin kind of has this paradox to it where part of what people are latching onto is that the code doesn't really change. It's not going to be a smart contract platform. It doesn't want to be that. The community doesn't want it to be that. And the more time goes on, you've got this kind of dichotomy where the more it doesn't change, people are latching on to how hardened the rules are of that system, how hardened the code is. It's becoming ossified, that there's this 21 million hard cap, and here's the type of mining that we use. It's ossifying that this will not be changed. But at the same time, where it works against itself almost is that it can't keep up with all of the innovation that's happening in the space. And you look at the amount of what's called wrapped Bitcoin that has been tokenized now on Ethereum, because there's so much flexibility, as you were just saying, with something like Ethereum. People want to take advantage of the things that you can do with that platform, that you can lend, that you could trade, that you could be part of the metaverse. And Bitcoin can't be part of it because the code is just not designed to do that way. And people are giving it this premium for never changing or upgrading, which is also a bit of its Achilles heel. So I think it's going to be interesting to see in the next 10 years how all this stuff plays out. I don't look at Ethereum necessarily as less of a store of value. I think that the design of the system is just different, and it does have some unique properties in that it's far more flexible and programmable and functional than Bitcoin. But I do think it still has a lot of the same rules in terms of it doesn't have any central authority who can change the monetary policy. It's not backed by a central bank. It's not controlled by a corporation. It does have some hardened rules in terms of what the supply is going to be. So it's not just that one day the system, you're going to wake up and there's 30% more dollars or 30% more ETH that's been injected into the system. It is also resistant to those kind of things that we see in the traditional financial world. So it does still have some of that store of value quality to it and things that make it really exciting.
Yeah, perfect. So, besides Bitcoin and Ether, we know these are the two biggest ones. There's many cryptos out there. And this is, definitely what gets me skeptical and confuses me. I mean, there's so many of them. Which ones are good? Which ones are bad? You hear all kinds of crazy stories about scams, and this one went to zero. Some of them have, I think, no purpose whatsoever. They're just memes. So what do you think of the crypto landscape right now? I know this is very new. It's very nascent, right? It kind of feels to me like the wild, wild west, a bit like the internet stock bubble of the late 90s, where there was a lot of fluff. But as we know, some of these companies like Amazon, Google have been probably the best investments you could ever do in the last 20 years. So what do you think of the crypto landscape right now? What do you say of all these crazy coins out there, and how could a retail investor really navigate through this? Yeah.
So it's been noisy. This is not unique to the bull run of that second half of 2020 till early 2022. It was noisy in 2013 when I'm really paying attention to the space. It was noisy in 2017 during the ICO bubble. I think what's important for investors, newcomers to the space, to focus on is not getting caught up in the FOMO, in the hype of, new coin has dog, going to buy this one, and go and research the fundamentals of why does Bitcoin exist? Why was it invented in the first place? Why did Ethereum become a thing? Why was that invented? Why did a developer community rally around Ethereum and not Litecoin? And when you start framing that these are 0 to 1s, that these are inventing new categories, not just we're going to try taking something and redeploying it and marketing it and creating a bunch of hype, I think it helps declutter all of the new assets that are being minted. And some of them may do well, but people need to understand that you're taking on far more risk, that those platforms may, or those assets, blockchains, whatever it is, may not have had the same level of developer interest to vet through the code, to check the contracts for bugs, to ensure that they're safe to interact with. And so I think if you can frame all this around why Bitcoin and Ether are the number 1 and 2 by market cap, why they were that in 2016, 17, 18, 19, all the way through to today, right, and likely to continue to be, you can start saying, what is this portfolio about? Because Bitcoin and Ethereum are still extremely asymmetric bets. There's no world where Bitcoin and Ether fail, but all the other little tokens, went to the moon. I mean, there's, I suppose, some probability of that, but it's very low. And so if you can say, well, likely what's going to happen here is if the space wins, if the space does well, digital assets become integrated more into daily life, into people's portfolios, Bitcoin and Ether have a tremendous amount of upside potentially in them, that why take on additional risk, additional volatility to speculate on something else that may or may not have a developer community that could blow up? And so, if people want to play around with a small piece of their crypto or digital asset portfolio into the higher speculative newer tokens, sure, but just frame it against the blue chips, and that there's still a lot of room left to grow in those assets. A lot of new investors that I speak to feel that they've missed out on, Bitcoin and Ether, when there's really a lot of room for these assets still to grow, that again, they can be integrated potentially into more central banks adopting it onto their balance sheet, more countries saying we're going to test it out as a method of payment, real world businesses or traditional finance businesses saying, how can we leverage this technology and say, we're going to use Ethereum to send stable coins, tokenized USD between data centers, which is what Visa was testing. So I think understanding the fundamentals is the key to not getting caught up in the hype, refocusing on what are the blue chip assets here, and taking your time and not just, FOMOing into a position and dollar cost averaging, because it'll help turn off your stomach to some of that volatility and not feel like you have to deploy all your capital at one point in time.
Right. So you mentioned a few things I really, really like. First of all, you mentioned blue chips a lot. I like to focus on blue chips, the big guys. And obviously, it's quite clear in the crypto space, Bitcoin and Ether right now, and in the past for a long time have been the two top ones, right? So I consider them the blue chip cryptos. And as we know, even in the stock market, regular companies, the blue chips always survive and usually win and outperform over time. So thanks for that. I really appreciate that explanation. I'm learning so much here. Super happy you agreed to come on. So what about stable coins now? So you hear, there's crypto, then there's stable coins. I have no idea what stable coins are. You hear that fiasco with the Luna, that it was pegged as a stable coin, I think, but it went to zero. So again, I'm going back to my other question on how regular retail investors like myself, who, just go to work every day, and regular people don't have the same knowledge you have. Well, what is a stable coin? How does it compare to a Bitcoin and Ether, which, correct me if I'm wrong, those are not stable coins, right?
Correct. So a stable coin is meant to peg its value to some other asset. Now, most of the stable coins that exist currently are trying to tether themselves to the value of a US dollar.
The dollar, right?
One. So one stable coin is $1 US. And what's important for investors to understand is that there's different ways you can build a stable coin. So one is you can do something called fiat backed, meaning you're going to take actual dollars, you're going to deposit them into a bank account, you're going to have some type of issuing authority who is going to create a digital token representing that dollar deposit in a bank account. So theoretically, for every one USDC, which is one of the most popular stable coins in existence, created by Circle, for every one USDC, you're assuming that there's one actual dollar in an account. Pretty easy. You shouldn't have fluctuation in the value of that token price because it's backed by an actual dollar. The next thing that you can do is collateral backed, where you say, I'm going to lock up, let's say, maybe my Bitcoin or my Ether, and I'm going to borrow against this. And you're going to actually create the stablecoin backed by the Bitcoin or backed by Ether. So you've got an asset like Maker. It's a 2-token system, and you've got something called DAI, D-A-I, and DAI is a stable coin that is not a hard peg to the US dollar. It's a soft peg. So it might float around based on a number of incentives to people creating them or redeeming them, but it floats around. So it might be 98 cents. It could be $1.02. It could be $1, but it's a soft peg to USD. There's a third bucket, which are algorithmic stable coins. And algorithmic stable coins is what Terra Luna was. And there's a lot of skepticism in the community on if algorithmic stable coins work. When the peg breaks above $1, it's very easy to bring the peg back down because the algorithm can just issue more of that stable coin, dilute everyone, and pull the price back down. Now, where algorithmic stable coins get into trouble is when the peg breaks to the downside. What is the incentive mechanism to try getting the peg back up to $1? And so it's susceptible to what's referred to as the death spiral, where once the peg breaks to the downside, it quickly just spins out of control to zero, which is what happened with Terra Luna. So there's different buckets of stable coins. Now, where investors need to think about stable coins is, do they want to use that as a quote currency when they're trading? So they're going to go on an exchange and they want to convert some Bitcoin into Ether. Do they want to convert Bitcoin to Ether? Or is it easier to say, I'm just going to use tokenized USD, and the tokenized USD can move to a decentralized exchange, or it can go on to, a Coinbase or a Gemini, and I'll just move that USDC around wherever I need it to be, take advantage of the blockchain, but have the stability of a US dollar. This is kind of the first use case of why someone would want a stablecoin, because you get the flexibility of the blockchain, stability of a US dollar. Where a lot of people started using these assets in the last couple of years is to generate yield, where they're seeing lending applications exist on the blockchain. So you've got Compound and you've got Aave, who are kind of the blue chips and most well-known of the lending platforms. And, maybe you could generate a 2% or a 4% yield on that USD. Maybe it was as high as 15% at various times. What people really need to understand, though, is that they're taking on additional risk. You're taking on risk of the type of stablecoin that you're using, how it was issued, who issued it, and who controls the redemption function, the smart contract or the platform that is generating the yield on that loan. Is there counterparty risk? Is the counterparty taking in collateral? How, as that yield goes up, you have to start asking questions, how risky it is to generate that yield. There's tons of different ways that this can be done. So I'm not really going to go too in the rabbit hole, but that's how most investors were thinking about stable coins in the last little bit, versus just saying, I want exposure to Bitcoin and Ether. I believe that they're important assets. I'll hold them over the next, 5 years and see where the price goes. Still a very asymmetric bet. Stable coins aren't that. There's no stable coin you're going to invest in that is going to, shoot up in value. The point of a stable coin is to be pegged to something, a euro, a yen, a dollar.
Right.
So you wouldn't invest in a stable coin. You would use a stable coin as a tool to perform some function.
Right. This seems to me like, I'm starting to now with this conversation, seeing the potential future of blockchain and crypto is very, very, very interesting, right? You could use it for so many things. And, thanks for the explanation. I now understand what stable coins are a lot more than I used to. So it's pegged to something. You could use it to lend out and generate yield. And I know that that's sometimes where you could get in trouble, right? Because you have to be careful. You have to know that the platform. You hear all these scams, right? BitConnect, right? One of the most popular scams, where there's that famous meme of the guy yelling on stage. That's pretty funny. So, but you hear, bots that automatically trade it and make yield for you. So, like you said, you got to be careful. You got to know what you're really putting your money in, and it could be a lot more higher risk with that. So I'm curious to know, this is, I guess, why they call it an ascent asset class. There's so much functionality, so much crazy stuff that's probably going to be coming in the future. Very exciting. So let's go back to Ether a little bit more. You guys focus on Ether. You're an Ether expert. So when it comes to Ether, you hear these terms that sound amazing, that have a lot of potential, like Internet 3.0, right? Internet 3.0, the Ethereum platform will have a big role to play on that. You hear things like smart contracts and DeFi or DeFi, things like that. So can you give a few examples, for everyday people, or some practical examples of the exciting stuff that Ethereum or the Ethereum platform will be able to achieve in the near future to help with Internet 3.0? First of all, what is Internet 3.0? Let's start with that, maybe.
So the term Web3 really refers to breaking down the internet in these three distinct phases. And I've heard some people say that there's really four. But what this is about is, in the early days, the web was very decentralized. You would connect into someone's server, maybe it was a university. You would download a research paper, you would read it. You wouldn't really interact with it. That was Web 1.0. It's what people will refer to as a read-only like internet. You can read information, but you can't do anything else. In Web 2, you ended up with this read and write environment where all of a sudden you can chat, you can send video messages, you can go on Instagram. It's far more dynamic and interactive of an experience. The downside of Web 2.0 is that to get that speed, we centralized everything and said all of our data is basically going to be housed by Google, Amazon, Facebook. It's cheaper, faster, and better if we just centralize everything. Well, people don't like that either, because they're saying, well, there's too much control and you're trusting these companies to secure the data, to not exploit it or use it in a way that you don't agree with. And so the idea of Web 3.0 is, can we have the richness and functionality of Web 2, but in a decentralized way? And one of the layers to building Web 3 is this trust layer that didn't exist before. And that trust layer is about, where are you going to get the source of truth for who owns an asset or where an asset exists? And that's where Ethereum comes in, or a smart contract platform that may compete with Ethereum or displace it. You need something to record who has what. Who owns that Twitter account? Who owns that phone number? Who owns that data? Who has the rights to open a piece of information? And so you may be paying these small transaction fees to perform a specific function, but the idea is to remove as many of the agencies and middlemen and allow more peer-to-peer like interactions. So if you think about the music industry, instead of there being lots of hands in the pie along the way pulling fees, can the artist get paid direct? Right. And in real time? You need a trust layer to do that. You need a method of payment to do that. You need a way to remove those other agencies and say, we don't need to trust that central authority anymore, because what we trust is the blockchain. We trust Ethereum to move that fractionalized stablecoin. You got paid 1 penny per listen. Actually, that'd probably be very high, but I don't actually know what the royalty payment is on music.
Right. But it's a good practical example, right?
Yeah,
where now everything's controlled by a few companies, and there's fees, there's like a middleman. We hear a lot about privacy concerns. We've been hearing a lot about this lately, in Senate hearings about Facebook and or Meta, I would say now. So you're saying that Ethereum would decentralize it, take the power away, basically have that ledger security. Okay, so now I'm starting to realize how it's similar to Bitcoin, where it's really for cheaper, faster, and more secure transactions, Bitcoin with the currency. But with the Ethereum, it's more, you could, for a bunch of other practical things. So you gave a good example with the music. Another good example would be NFTs, right? Art, right? Instead of going through, I don't know, Sotheby's or other companies where you got to pay 10, 20%, you could just do it with Ethereum to have that safety. Anonymity, I'm assuming as well, plays a part in that.
Sort of. So the blockchains are kind of pseudo-anonymous in that you may not know who owns which account, but I can see what that account is specifically doing. But the individual behind it has been abstracted away. That doesn't mean that they can go and steal and be out of the purview of law enforcement. There's just different tools to monitor behaviors. And when you cash out through exchanges, there's flags on accounts where there's suspicious activity or suspicious interactions with various smart contracts. So it's not quite anonymous, but it's a narrative that is testing how it's going to play out. Will you have transactions with better privacy built into them? I think in the next few years, that will be a driving narrative behind layer twos and scaling solutions. Does privacy have a role to play here? What is the appropriate amount of privacy and encryption on a transaction versus it's all public information?
Yeah, they don't call it an ascent asset class for a reason, right? It's still in progress. And I could definitely start visualizing the utility of the future of it. So thanks for that. Really appreciate it. Going back to crypto in general, it hasn't been really a great couple of months for crypto, right? They pretty much all have gone down in value significantly. A lot of people are pegging it or saying it's the big reset. You see all these YouTube documentaries, all this stuff, right? Who knows what's true or not? So you also hear about these crypto companies filing for bankruptcies. I don't know exactly if they're exchanges or they're lenders. So many crypto supporters, including the patron saint of the Bitcoin, Michael Saylor, even Kevin O'Leary, which is one of my personal heroes or influences early on to get into dividend or income investing. They say that this is actually good for the crypto landscape, that this is mostly caused by over leveraging, right? You hear over leveraging, people know what that means. When you over leverage, whether it's crypto or anything else, could be dangerous, and you could get in trouble when things go down too significantly, too hard in a small period of time. So what do you think of the crypto landscape right now? Do you think that this is the big reset? What's your opinion on what's been happening in the last month or so?
So a couple things. The first, for any new investor to the space, I'm always encouraging them to untether statements like, it's been a bad few months for crypto. That's specific to the price versus technical developments and achievements.
That's true.
And I think it's important to separate them, because if you think about the bear market of 2018 to that first half of 2020, the price of Bitcoin went from 20,000 to 3,000, Ethereum from, just over $1,000 down to probably $85 at the low. But there was a signal out there that would tell you that the space didn't die, which was the developer community. And a lot of the piping and groundwork and infrastructure was laid during those years. So DeFi and NFTs, basically emerged during this era, but quietly, because people weren't paying attention. And so there's a lot of alpha to be made by focusing on the times where the froth has been washed away. There's less scams because it's harder to convince people to buy your garbage project. There's a lot of really good stuff to focus on during those time periods. Currently, what is there to be excited about? Ethereum is upgrading the network right now. It's transitioning from proof of work mining, electricity and computing hardware, to something called staking, where you could generate yield by just helping validate the network. That is a monster upgrade and opportunity for investors, but a lot of people are very focused on the price. So I want to encourage people to really separate those two things, because it may help them think about how they're going to play out their portfolio over the next few months or few years in this asset class. In terms of price, there's no question there was tons of leverage in the system, and the explosion basically of some of these centralized companies, and also some DeFi protocols like Terra Luna that we spoke about before. The centralized companies that acted as these black boxes for lending and had way too much leverage or mismanaged treasuries. This is not specific to crypto. We've had hedge funds blow up in traditional finance. Every few years there's one. There was in 95, 2001, 2004. The meltdown of Lehman Brothers in 2008. This is not specific to crypto. So when people say crypto is getting hammered right now, I say, have you seen the price of Shopify? Have you looked at the value, of Facebook or anything? So It's not specifically crypto that is pulling back. The question is it pulling back because the fundamentals were wrong, or that the assets themselves are losing developers, or that there's technical flaws? That would be a real concern. But I don't think that that's what's happening. So all that's changed is market sentiment and people saying we're going risk off, we want to go to cash. People in their general lives probably have a lot of leverage. I can't speak to everyone, of course, but I live in Toronto, spend a lot of time in New York. And you look at the price of real estate, and when interest rates are basically artificially low, everyone borrows a ton and they over leverage, and you end up with these real estate assets that are, way higher than we've ever seen in history. And so what you're watching right now across all markets is leverage coming out of the system, people going back to cash saying, what are my liabilities? Can I survive 3 years, 4 years, 5 years? We, really hit into a deep recession. They need to make sure that they can meet their obligations. And crypto, that's still a new asset class. It's still not quite proven itself. The narrative is there, but people who are saying, well, it didn't turn out to be a hedge against inflation. I always go, maybe. We haven't seen a long enough time horizon. Maybe it isn't going to be a hedge against inflation, but I think it's too early to say that the narrative has been fully played out and didn't work, and now it's just a retraction of price all the way down to zero. I don't believe that to be true. I'm focused on long-term. What is happening here? Is this technology very important? Yes. Another thing that's important for investors is to understand you can't have the technology without the tokens underpinning it. You can't build a blockchain. This was especially in the 2015 to 2017 era. I used to get in fights with people around the blockchain, not Bitcoin. So you had companies saying, we like this idea of a blockchain. We just don't think we want Bitcoin part of it or Ether part of it. We're going to build our own private blockchain. And in the crypto community, we joke and call that MySQL. We already have databases that can do that. You didn't need a blockchain to upgrade your network. The purpose of these networks is, how do you decentralize trust? How do you have people around the world come to consensus on ownership, digital ownership, without trust in a central authority? That's what this is about, and it needs those tokens. And so for investors who are taking this long, time horizon, low time preference to this bet, the question is, do you think as a society we are moving more towards decentralization? That there's going to be more disruption for software to remove agency and challenge these central authorities? And first, we saw in early days, great examples are Uber disrupts taxi industry, Airbnb disrupts the hotel industry. Now you've got these digital currencies disrupting monetary policy or challenging what monetary policy should be or can be and who can create them. And so if you believe that there's going to be more of that in the future, then I think you have a lot of reason to be bullish on these assets and look around at the infrastructure that's being built and the mind share that is coming to the space, because the design canvas is so wide of solving all sorts of problems. How do we do insurance on a blockchain? Can we do that without a Web 2.0 or a traditional finance company? Can you use a smart contract to build an insurance product to ensure the failure of another smart contract? Whether the answer is yes or no, the experimentation is playing out, and it's really exciting. And I have to believe, as someone who attends a lot of crypto conferences and research conferences, when I go to Stanford, every year there's a crypto conference at Stanford. It's actually a cryptography conference. And one by one, you have these, PhD researchers from Stanford, MIT, Harvard, Santa Barbara. You've got top schools and all these PhDs coming up presenting their research, and they're agnostic to which blockchain takes it on. They're not there to sell you Bitcoin. They're not there to sell you Ether. They're there just telling you about the technology and where it can go, and they're fascinated by it. To me, that's telling you something. To me, it's saying, follow the developers. The smartest people in the room are obsessed with what these things can do. And so if your time preference is long enough, there's something happening here that's very special and very important.
Excellent. Yeah. Two things I really like that you said, and I talk about this all the time. You have to focus on your time horizon, right? If you have a long-term time horizon, the day-to-day, month-to-month, year-to-year, whether it's crypto or stocks or anything like that, it's not that important. What you should focus on is really the technology, the utility, or the company, right? You got to focus on the company. So people, they get very impatient. They see stocks going down, they dump their shares, but meanwhile, these are some of the best companies in the world that have survived 100 years and keep making products and services that we all use and need. So they kind of get mad at they focus too much on the stock price, on the price, not on the technology, the utility, on the underlying assets. So you're kind of saying, focus on that instead of just the price, because that's just a small part of it. And that's just gonna, eventually mature as well with it. So focus more on the utility. And like you said, there's more and more exciting stuff coming out. So I'm with you. I agree that that's the way you should look at it. I always tell people, whether it's anything, you should always have a long-term horizon. We're not traders, or, especially not me. I'm not a swing trader or short-term trader. Although you can do that with crypto, and it's especially attractive because the more volatile something is, the more swing traders and short-term investors will be attracted to it, right? It's not like you could swing trade a AT&T or a Pfizer stock, right? They're going to go with something more volatile. So like your advice is, look at the fundamentals, look at the utility that this technology is going to have instead of just the price, which is pretty crazy right now. So thanks for that. Really appreciate it. Anyway, Brian, listen, I kept you for way too long. I apologize for that. This has been great conversation for me anyway. I hope my audience appreciates it. I've learned a lot about Ether and the crypto landscape. So I just want to thank you very much for being here with us and answering all my questions.
Thank you for having me. And if anyone has any further questions, it can always be found on Twitter and LinkedIn. Happy to guide people in whatever direction for whatever information they're seeking out. I'm happy investing and hope to be back soon.
Perfect. Thanks, Brian. I'll put your info in the description below. Thanks, everyone.
Sounds good. Take care.
Thanks for watching, everyone. Really appreciate it. Make sure to hit that like button, that thumbs up button. It helps the channel grow, so it's a win-win. Also, make sure to subscribe if you're not already subscribed, not to miss out on my future content. It's all about income-focused investing. And also, you got to be subscribed if you want to participate in my surveys where I ask the audience, I ask you what topic you want me to cover next. So very important. Subscribe, hit that little bell button so you are notified of any new videos and any new surveys as well. Make sure to check out our website. We have a website, passiveincomeinvesting.ca. That's where you could purchase my digital product that I'm very proud of, the ultimate DIY investing package, which is on version 3 right now. So this is a reference tool. It's a companion tool to help you build your own custom portfolio. It's good for Canadian investors and American investors. So it covers both the Canadian and American stock markets. It has sample portfolios as well, multiple sample portfolios for different investing styles. So it's a very cool product, and it does come with lifetime updates. So you only have to purchase it once. My intention is to come out with a new version every single year. So you purchase it once, you never have to pay for it ever again. You'll get the lifetime, the updates for free forever. Also, right there on my homepage on the website, I do offer a one-on-one coaching session. If ever you want a little more personalized help, it's a 1-hour Zoom call with yours truly, a one-on-one with me where you could ask me anything you want. We'll go through your situation and I'll give you my opinion on how best, I'll help you best I can, basically based on my opinions. Just keep in mind that I am not a licensed or registered financial advisor or financial planner. We also have a Facebook group, so join us there. Passive Income Investing, over 11,000 members. We try to get the spams and the scammers out of there as quickly as possible. So it's a very, very clean group. Everyone's asking questions, trying to help each other. And it's a really, really cool and fun community. If you want a little bit more personalized stuff on our day-to-day life, follow us on Instagram as well. We recently moved to Panama, so if you want some more information on more personal stuff, you could follow us on Instagram. My mission, the mission of this channel, will always remain the same, everyone. It's to help everyday, regular, normal, working people to invest on their own, do-it-yourself investing, right, in order to build their own stream of passive income to enhance their quality of life and one day become financially free, financially independent. Very important goal. So, as usual, I continue to stay safe, everyone. Stay healthy, and of course, stay passive. See you next time.